Good morning, all, and welcome to the European crossover webinar. And let's go on and pull in here with the euro. We're still seeing another dip, and apologies here for a little bit of a delay here. We're still seeing this pair go in and not be able to go in and generate any real upside. If you saw the basic technicals, I did go in and update those in the Asian session. I updated the majors ahead of today's session, and to a certain extent, I don't want to say it's relatively easy, but it's basically just that, in the sense that with the euro, we've got this downtrend line here, and we have not been able to go on and get past this area. It's keeping this capped very well, along with the 1075 area here with the euro. And so at the end of the day, it's still going to be the two areas that we were looking at previously, which is going to be 1075 and 1033. One moment. 1075 and 1033 right here. So unless we can get beyond that, there's really just, I don't want to say there's no hope, but it's not for the, likely that we can go on and push beyond that at that point. So that's going to be the support and the resistance for today. But unless we see a smattering of short covering, I know that there were several banks that have been were looking for the euro to go on and move higher, saying any dips were a buying opportunity. Unless we can get past this area here, we just may find ourselves trapped in the same space without even making a move, unless we can see the dollar itself in and of itself make a move lower. Let's go on and move in now to the cable. Now this one is look on the daily. I mean, complete difference, from with the euro. But one of the things we're looking at, and we're actually right up here against a resistance level here on the 2-hour chart, and I want to get into that. Right here, 2573. And if you look here with this 2573, you've got a good little area right here, 2573, between that and the 26 even of decent volume. And I think that the pair, and right here we have it marked up for 73, is going to have a tough time to be able to push that. Now, right now it does have the momentum going this way, and to a certain extent, it's Friday. What they call sometimes the Friday flows is that, if a market gets moving, generally you can have people that are going to be having a force to cover that have been, in this case, short. Now, the market's been on a pretty good little bid to start with anyway. So I'm not sure how much more we'll be able to goose that thing, but anybody who stepped in may have shorted, probably is being forced to, or maybe looking to have to cover. But that being said, this is a good volume area here, but this between these 2573 and 26 even. And so we're already here at the 2573. We've already actually been able to push this. I would think that with traders coming in the U.S. session, probably see a little bit more of a follow through on that. So since we're already here, we'll go on and call it 126 even for the stretch here. I don't want to call it the stretch, but you can see here, good little volume coming in here. I would think we'd have difficult time to try to push beyond it. We're already at 71. So let's go and list this for 26. And support is going to be this 25.18, because you would think that any pullbacks, um, you'd be looking for people, well, or people be looking for any kind of pullbacks to go on and cover if they are short. You know, and say, okay, well, if I can get it to come down 50 pips, 75 pips. So we're going to go with this, see, actually 25.02. Let's just get it just a little bit higher there. 25.07. And let's move on to the Aussie. Now this pair has been under pressure, and obviously actually to some extent, probably holding up a little bit better than what we're doing. I mean, what was expected after the employment report. Certainly put the pressure and opened up the door for the RBA to go and do an additional cut. So probably could be worse. Let me put it that way. Probably could be worse. Looking here, we're coming right there. You can see this volume level coming in right across. And actually, that's where we found that support is coming in right there at 67.80. So we're going to go on right there. Let's pull this down here. And that's actually where they found the support here, right there. So we're going to put this as support for today, 67.80. And we already had 81, so we're going to keep that there. And on the upside, let's go on and move into the 2-hour chart. Well, the upside is going to be 68.34 right here. That'll be the resistance. I would give it a little bit of a nudge over that. So 37 will be fine, but that's going to keep this market pretty much intact. I would think it's going to as we go into the weekends, I think I have a tough time trying to move any higher than that. We'll push this here. There's where we came up there with that 37. There we go. And the Kiwi, well, this thing has just not been able to find very much of a bottom, to say the very least, and continues to remain under a lot of pressure, and really opens the door for this to even move a heck of a lot lower. Matter of fact, if we can close below this last area here, which we're already behind right now at 62.97, it's going to open the door for us to move a whole heck of a lot lower here. For today, we'll go with this 62.55. And right there is going to be resistance. Actually, right there, we'll call it 63.16 for resistance. And we're certainly looking like we're going to be in a passive full of trouble here with this Kiwi, and looks like it will be heading somewhat lower here. But look, there's just there's no reprieve on here. Anybody that's long, I would think, be looking at just going and cover and get the not cover in the sense, but just long, looking to just exit and just exit as quickly as possible. I don't see anything turn around here on the Kiwi. Let's go move into the dollar CAD. We're kind of somewhat trapped in here in the middle with the dollar CAD, and I'll show you. Once again, I mentioned I did the basic technical in the Asian session, and I actually just used the 2-hour chart. You can see things. I want to say it's more clear, but we'd made it, on FOMC day. We had our bias chart resistance at 33.07, and that kept the market here in check, and we should continue to retain that. But on the downside, 33.24. So we're kind of basically smack dab in the middle here at 32.56. And what I put in the basic technical analysis was a break on either side, and I'm talking about a close on either side, a close above 33.07 or a close with 32.24 would open the door for the next 100 ticks. And I think that's where the placement would be. We're just sitting in the middle. So this will continue to be the resistance here at 33.07 and 32.24. Really no change. I mean, it's almost like a neutral. You can see here, this 32.56, almost like a, it's certainly not a pivot, but I'm saying almost like a dividing line. Is this, we're just kind of on either side, we'll just kind of waver to one or the other. But the bias chart support is going to be, as I mentioned, 32.24 and 33.07. And you can see that it's pretty clear as far as the resistance. I'm not sure what's going to push us out of this area. The only thing I think that's going to push us out of this area is if we do go in and see the dollar come under pressure. Obviously, that can go and open the door for us to roll over. And as I mentioned, a daily close below here would open the door potentially for the next 100 pips on either side if the dollar were to take off, i.e., let's say the dollar index reasserts itself, then same thing, the euro gets into trouble. Boy, I think then that's the end of it, for the euro, in the sense that I think that at that point, bulls will have had their or prospective bulls, I guess you want to call it, will have had their fill and said enough already. I mean, until the euro proves itself, I keep hearing it's a buying opportunity, and it has, we just haven't been able to move. Despite different events have come up, you think, okay, it's finally going to get past because we're past the ECB. Oh, the dollar's finally going to sell off because now we're past the the FOMC, and it just simply hasn't happened. I'm referencing the euro, but I'm saying we're at a point now where it's basically with the euro where it's going to go on and either bust out of 1075 in that downtrend line or just roll over and head much lower. And I think that's where it's not, I think that the dollar CAD may ultimately be pulled from that area. And so we're just kind of sitting here wavering on the fence, as I call it, a little area, level here. It's not a pivot, but I think we're just kind of sitting on the fence here. If the dollar were to go on and take off, well, then we'll get past 33.07. All we have to do is close beyond it, and I think we go 100 pips, and the same thing on the downside. Close below it, and we go 100 pips. So those that bias chart support and resistance will remain the same here with the dollar CAD. And that's what I just put here as a range. And you can see here, it surely looks like it's just stuck in the middle of a range. So let's go on and move into the dollar peso. Now, with the dollar peso, I still have this marked off as the bias is bullish, and it's from a little bit longer term basis, but well, very much long term basis in the sense that I'm looking here at the daily, and we have pulled back. But the key thing is it has to hold the 61%. But this 1923.6 area here had been so huge and still have it as a pivot. And each time we try to get beyond it, we turn around and keep bumping our heads. Once we got above it, it looked like we come back down. We slid right back down. And so this 1923.6 really essentially worked as a pivot level. And when we finally broke above it, we certainly took off with gangbusters. But as it's pulled back, it's continued to pull back. We were looking at the time, we're looking for pullbacks to 1985, and then we said, but 68 will be a great area, and we will see pauses, but we keep rotating lower. Well, we've held this 1932 to 61%, but this is essentially the market definitely has to go on and react at this point. Any dip, it really opens the door for a whole heck of a lot lower. Same thing we're talking about the dollar here. Whether we get that break or not, does it finally come to be? And so I'm still inclined, like I said, to think, you know what, as long as we're holding above this area, it's still bullish in a little bit, somewhat longer term area. But it's, as long as it holds, it's not the 61%. But as I mentioned, it's not like as if it's had a great, rebound from this area. It has picked itself up. It has moved higher, but we're not adding on to that. So let's go and take a look at it here on the 2-hour chart. So here is the 32 and the 45, and nothing's really changed. The only difference is now we're giving it a little bit more. We think I would not expect this to venture down to 1932 in the sense that if you're bullish, if it does just that, do just that, then certainly it opens the door for us to break and go back towards the 23.6. So at this point now, support's going to be right there, 1935. And if we are going to break higher, initial resistance, we do need to move higher. I mean, we're going to have to start to make a bigger move here, which is this 1956, but we'll probably go and find some resistance coming in right there. We're going to say right there at 1953. So it's going to be 1935. $19.53. And I'm really giving it the benefit of the doubt on this bullish thing. If on a very, generally our bias is obviously more shorter term. So you have to say, oh, it's been bearish, but trying to give after this breakout area, as long as we stay above, give them the benefit of the doubt for to react. Let's see what happens here, but it certainly has not rebounded in any sense whatsoever. With that, let's go and move into the dollar yen. Dollar yen is still holding up relatively well here. You can see here against the 778. There's our bias chart resistance from yesterday, the 772. One of the things I went and shared here on the, and I posted in the room on the basic technical, well, it looks like it was going to appear or start to form a little head and shoulders. Now I have been working a bid here at 820, but we're still pushing a little bit lower. Once again, like I said, I think that if we can get any moves back up in here, I think that from that may put us in the situation of where we get a little bit of a head and shoulders. I would have expected a little bit better rebound up here. Maybe, as I mentioned, around here, the 820, 825. And then we go and roll over. But the market is looking a little bit tired. But here's the deal. As long as equities hold up, and boy, equities have continued to hold up rather well, it may be a little bit difficult for the dollar yen to go in and break lower. But I think that once we get past this witching time and roll into next week, potentially we can go in and make this roll over. So at this point, to me, resistance is going to go on and come in. It will keep it right here. The upper area would be here right at 825, but we'll say 820, which is where I'm working my limit. There we go, 820. We've had 772, and so the market's still holding up. So really no changes here on that. But I did want to go and point this out. I had posted this chart in the room yesterday, and I think there, or actually as early as yesterday morning, I think we have a little bit of a head and shoulders here. It's not a good head and shoulders, I'll give you that. But it has been after a long ascent, and the markets have stalled. And but this right shoulder, and generally the right shoulders don't go up as high anyway, but it's pretty low. But as I said, any moves to the 820, I think is going to be a decent area to go on in from a risk reward to go on and step and take a short against this. So here we are with the cash dollar index, and boy, we're really stuck in the middle of the middle. And when we looked at it, and I'll show it to you on the 2-hour chart, same thing, I shared that on the in the basic technical in the Asian session. It's all about this zone here. And we're just flat smack in the middle of the zone to a certain extent. Obviously, we've pushed a little bit lower here. But to me, it's all about this zone here. And either way, we're going to break here. I mean, I think that if we get a daily close below 98.14, that'll open the door for this to move lower. It might have to, like I said, we're going to go with the bias chart support right there, 98.08, right here. Let's go move this. Now, that's going to be a bias chart support, but to me is the way we go out of this zone here is going to dictate where we can make the next move. One of the things that's helped the dollar is when we saw some headlines come out from the editor for I think Shin Su. I'm not sure how to pronounce it, but anyway, he was indicating, and I think it's really because what had happened was earlier in the day, a representative, or they said not necessarily a direct representative, but a gentleman close to Trump was saying that the president was ready to ramp up the negotiations, not negotiations. I mean the tariffs if the Chinese don't come through. And shortly thereafter, maybe about an hour or so, then we saw that editor from Shinsu. Anyway, they were saying, hey, China's not so quick to go on and they're not so quick to want to find a deal as much as some people think. And then we saw the S&Ps kind of pull back a little bit. When that happened, we saw the dollar go a little bit on the bid. It's been that old knee-jerk reaction. We'll see what happens. I mean, but at this point right now, to me, it's just a matter of this zone right here. So we're going to put our bias chart support is going to be 98.08. But to me, it's the break of this zone here on a daily that's going to go in and dictate where we'll move. The top of the zone is 98.58, and probably, like I said, we'll see where we push out higher. But for right now, let's go move this. I think either one of these is really going to go in and push us. If we get beyond 98.50, or if we get beyond 98.08, I don't think the market really look back. You're coming in on a Friday. If you get beyond this 98.50, I think people are going to try and stand in the way of this thing. They just, if they are, let's say, short the dollars, I would think is looking and say, you know what, forget it. I'm out. So that's what we're going to have. It's going to be 98.08 and 98.50, but look at it in the context of this zone. And if we do get this close, once again, I think if we get beyond 98.50, you'll get those that may be short the dollar say, you know, I'm out. That's going to push us and get us beyond this zone, open the door for a bigger move, obviously. Same thing here on the downside. So it's really a matter of these two levels here, this boundary. And we're still going to say it's bullish for right now. With that, let's go and move into the cross rates. Well, it shouldn't come as any surprise whatsoever to see us continue to move lower here with the Kiwi yen, with the pressure that we're seeing with the Kiwi. And we had our bias chart resistance, or support, I should say, here yesterday. Obviously, we're breaking below that. And really opens the door for this pair to come in lower. And I can see the support level that they can move to right there. You see the touches here, here. And this can be 67.57, 67.57. Upside resistance is going to be right there, 68.14. We're just hanging on here with the euro yen. Today's really more about the euro itself than it is the yen. The yen's kind of holding its own here, and we're just really on the precipice of this pair. Um, it's not necessarily breaking down, but certainly come back in here for a little bit of a correction. Resistance, and we're looking at resistance in the way that it could kick further buying, kick on further buying. So the resistance is going to come in right there, buy chart resistance at 1961. If we can get past 1961, things have probably turned around for the euro, and now we can start pushing higher. So that's going to be our resistance. It's going to work almost like a pivot. So it's going to be 1961. We're just going to come in right there at 1901. 1901. Same thing in the sense that almost like a pivot. We get beyond that and really opens the door for us to garner some momentum. So 1901. And with the euro on, as weak as the odd has been, I would have thought we'd maybe even able to have pushed a little bit higher here. We made a challenge up here with the employment report, but we have not been able to even take out that high. So looking here with the coming into today, it's still kind of going to remain here because of the weakness in the Aussie. So we're going to go on and keep that at 62.97. And no change here. Same thing here on the bias chart support. So we 62.26, 62.98, we call 97. So we're going to go and retain this bearishness for now, because if you look at this, we would need to close above the 62.97 to say, okay, now we're back on a bullish mode. We've returned back here to this area, but we'd have to get above that to say, okay, now this is get back onto a bullish bias. Although it's had a decent run, it's just been a return run essentially. Let's go move into the Euro Kiwi. Completely different story here. Look at this. We're pushing that line there. And I would think that with the ongoing weakness for the Kiwi, that we'll still continue to push higher. This is actually going to be the resistance here for today, but it certainly looks like this market is going to continue to move higher and make a run to the 177. But in the meantime, for today, it's going to be 76.29. Support's going to be yesterday's bias chart, resistance 75.45. And here with the Aussie yen, we're just hugging these lows. The only difference is we will move it a little bit lower here. It's going to come in right there, 72.97. 72.97. And the upside will remain right here, 73.70. But we may see a little bit of a evening up as we come into the weekend, or as the day rolls on. Maybe some disappointed bulls, and that's why we're going to move this a little bit lower. If we want to break, I don't think it's necessarily going to break it, but has the potential, like I said, to maybe slide a bit as some bulls decide to go in and close out positions going into the weekend. The bias chart resistance has a potential to move up here, but right there, we're just going to move the bias chart resistance just a little bit higher than it was already. And that's going to come in right there, 35.59. Support's going to be 34.78. There's some support coming here at 35.01. Let's go with that. But this is where there's a little bit more volume coming in. So it's going to be 34.80, 34.80. And the sterling up, we're just making above the bias chart resistance here, and we're just You can see here, decent little level here. For the day, it's right here, right there. 84.26. Yeah, 84, 82.6. And then support. $83.88. Coming in today, we do have retail sales, Canadian retail sales at 8:30 Eastern, with Eurozone consumer confidence flash at 10 a.m. Eastern. So no U.S. data. We do have Mexican data coming in at spending data actually at 7 a.m. Eastern. Producer prices, German producer prices earlier were, well, let's get a little bit on the weaker side. With that, let's just go on and take a quick look at gold. We've had a couple opportunities to push even lower, and we have, but the market's kind of holding its own here. We talked about this yesterday. Remember we said about the resistance coming in around 1503, 3.5 on the spot. And right now we're at 1513 in the futures in December gold. And we did see the market pull back, but we're holding up, and it's been to a certain extent resilient here. So we have the potential to move push up a little bit higher. So when we're looking here, they would actually come in right there, 1512, about $7 higher. And right now in the futures we're trading 1513. So we're talking about 1520 in the futures for resistance and support. Just a little bit lower. Right there, about $5 lower. So if you're looking at the futures, 1507 here. Well, with equities, they're kind of moving at their own to their own drummer beat. So initially, with triple witching. One thing I will say, it's held up relatively well, and has kept the dollar yen from sliding. I would think once we get past this week, we may finally see the dollar yen come in a bit. Crude oil. Well, we know how we started out the week with a big bang. I'm kind of finishing relatively quiet. Yesterday, even though we moved, moved around a bit. It's still relatively quiet. I mean, obviously in this context, but let's go push this back. Still not a whole lot here. Yeah, actually the resistance come in right there at 59.05. And Boon's relatively quiet. Look here, Boon's and 10-year yields relatively quiet. So that's going to be it. There's the buyer's chart. I'll get that posted into the room. Good luck with the rest of the week and or what's left of the week. Euro just trading relatively quiet, 10.55. You know what? Let's go on and come back. To me, the rest of the day is about this. And we're looking at the euro on the daily. It's 10.75, confluence in here with the trend line. And that's going to make the difference as to where the dollar is able to go in and break. And whether we see that come to pass or not, or the euro just another, wouldn't necessarily say at this point, unless we break lower, another failed rally, but every time it looks like the euro is going to pop up, it doesn't come through. Until it comes through, it hasn't come through. So this, to me, this is the story for the rest of the day right here. And what happens ultimately, not only with the euro, but the dollar itself. But thanks for joining us here on the European crossover, and good luck with the rest of the day. See y'all in the chat room.